morning. Thank you for joining us. This is Tara Sewell, Internal Wholesaler. Today is our FMI Agent Christmas giveaway. We will also hear from Neil Sperling on life insurance retirement planning. Your lines are muted for sound quality. If you have questions, please reach out to your internal wholesaler after the call. Thank you. Thank you for your business and your partnership. We are honored to walk beside you as you enrich the families you serve, the communities you strengthen, and the futures you shape. Again, thank you. Congratulations to Jacob. He was our fall giveaway winner. And congratulations to our runners-up. Thank you for your business. Feeling lucky? Today we have 3,749 tickets in our hat, and they've been shuffling. One advisor on the call will receive a $500 Amazon gift card, and 4 runners-up will each receive a $50 Amazon gift card. In order to win, you must have earned tickets, be pre-registered with your full name, and be present for the duration of this webinar, and your name can only be drawn once. But before we get to our drawing, I'd like to introduce our Vice President, Neil Sperling. Neil will show us how we can use life insurance as a retirement planning tool. Neil?
Thank you, Tara, and good luck to those of you with tickets in the drawing. Leave it to the insurance industry to make up another acronym, LIRP, L-I-R-P. Basically, LIRP is using life insurance in retirement planning, specifically retirement income planning. This is where we take advantage of the tax treatment life insurance enjoys and designs plans with the lowest cost structure and the highest cash value growth potential with the intention of taking distributions in a tax favored manner in retirement. But first, thank you. Thank you for trusting financial markets for your brokerage annuity, disability income, life, long-term care, and Medicare supplement plans. We so appreciate each and every one of you providing us the opportunity to serve you. Without you, advisors on this call, we would not be able to provide the products and services you hire us to deliver. We cannot say it enough. Thank you for your business. All right, let's get started. The U.S. debt is staggering. This screenshot from usdebtclock.org was taken last week. It shows the U.S. has $38 trillion in national debt, with over $968 billion in annual interest on that debt, which is now more than the $929 billion the U.S. spends on defense. It also shows a whopping $105 trillion in total U.S. unfunded liabilities. Now here's something interesting. According to rankred.com, the total value of all money in circulation in all currencies worldwide was $50 trillion as of July of 2025. This includes all the physical money and the money deposited in bank savings and checking accounts. So the US, with $38 trillion in debt currently, has debt nearing the value of all the money in the world. While this information is shocking, what does it mean for US taxpayers? TaxPolicyCenter.org publishes a great deal of information on US taxation, including the marginal income tax rate history. This chart, last updated for tax year 2023, shows the highest federal marginal income tax rate for individuals going back to 1913. While we are not currently at the lowest rate that we have been in the past 50 years, we are near the lowest rate here in 2025. With all the federal spending over the past few decades, along with huge federal spending over the past 5 years, how will the US government pay for those expenditures? The Fed has been great at printing money, but at some point, tax rates must increase to pay the mounting debts. Where do you think the federal income tax rates are headed in the future? Many retirees have done their best to pay down debts during their working years. There's a large percent of retirees that declare themselves debt-free. They have paid off their home, their automobiles, and other loan obligations while looking forward to a debt-free retirement. But wait, what is a debt? According to Merriam-Webster, one of the definitions of debt is as follows: a state of being under obligation to pay or repay someone or something in return for something received. A state of owing So how does that apply in retirement? So while these retirees declare that they're debt-free, when they begin accessing their non-Roth retirement accounts, they find there's a debt burden upon withdrawal. We, of course, know this as income tax. Now this retiree realizes that the more in non-Roth retirement dollars they take each year, the more of a cut or debt we call income tax they have to give to Uncle Sam. You probably have seen retirees, like I have, limit their distributions and therefore their lifestyle just to avoid paying more income tax. Someone is going to pay the tax, whether it be them or their heirs, but it is unfortunate this debt or tax can modify a retiree's behavior and lifestyle. So, the invention of the Roth IRA. Pay income tax today on the contribution and reap tax-free income on the appreciated investment. What a cool concept. The government gets the tax today, the taxpayer is prepaying their debt, but doing so on a much smaller amount in advance. The Roth IRA was born in 1997, as you're likely aware. But have we had Roth-like accounts much longer? The simple answer is yes. We have life insurance. Back to the acronym of the day, LIRP. With a properly designed non-MEC cash value life insurance policy with the lowest allowable death benefit to keep the charges as low as possible, while funding it with a maximum allowable premium, a pre-retiree can get those taxes out of the way by using after-tax dollars to fund the plan. Now, the future retiree can enjoy tax-free distributions in retirement, permitting the plan is maintained properly. And of course, since this is life insurance, should death occur premature, his or her loved ones will be more financially secure in the aftermath of their loss. So let's look at the basics of the design. First, in designing the plan, we need to be mindful in avoiding MEC. MEC stands for Modified Endowment Contract. Now, with traditional life insurance, withdrawals to the extent of the cost basis are received income tax free. This would also be considered FIFO, or first in, first out tax treatment. The cost basis in a life insurance policy is generally the total cumulative amount of premiums paid. Now, one very unique thing about life insurance is that a distribution from the contract in the form of a policy loan is not a reportable tax event, even if the loan monies exceed the cost basis. If the policy is a MEC, it no longer enjoys FIFO treatment, and withdrawals and loans are reportable tax events to the extent of the gains in a LIFO manner, or last in, first out. Basically, aside from the death benefit generally remaining income tax free, a life insurance policy with a modified endowment contract status, or MEC, is treated from a tax standpoint much like a non-qualified deferred annuity. So in these designs, we must avoid MEC to maintain the unique benefits quite exclusive to cash value life insurance. Now further in this design, the life insurance death benefit is still quite important. Where else can you have an investment-like product self-complete upon premature death? While the death benefit is quite important, in order to keep the cost as low as possible, we try to have the death benefit as low as possible relative to the premium. One thing to consider is that while policy loans on a non-MEC life insurance policy are not a reportable tax event, if the policy lapses or is surrendered with outstanding policy loans, those cumulative loans are considered withdrawals and reportable in the tax year the policy lapses. A unique invention over the past couple of decades in the life insurance industry is an overloan protection rider. When the policy is in jeopardy of lapse due to accumulated loans and interest, the policy reduces to a negligible death benefit and is guaranteed for the life of the insured. This prevents unintended lapse due to loans, therefore preventing an unexpected tax bill. And then, upon death, the loans are no longer considered and the small death benefit is still paid out. Many, if not most, of our universal life and index universal life products have this optional rider for little or no cost to the plan. In preparing this review for today, we evaluated products from 8 top industry carriers that you're seeing on your screen. All of these carriers are rated A or higher by AM Best, and each have a large presence in the life insurance industry. For the example today, we'll use a 45-year-old female at standard no nicotine underwriting class. Now, the idea is this fictitious prospect is already maximizing her Roth 401k contributions at work and any available individual Roth IRA amounts allowed by her income. You would like to place more in her Roth IRA but cannot. Here is where life insurance may be an ideal addition to her overall retirement planning. So let's take a look at how this will work. We use a software package called Insight to compare life products for accumulation and distribution, such as in this example. This presentation compares 4 products at a time in a side-by-side display. Here's that 45-year-old female in this example. What this graph is showing is her premium contributions. At the bottom of the screen, you see the age, and on the left is the plan premium scale. You can see this client is paying $2,000 monthly, which is $24,000 yearly, and the client is paying this years 1 through 20. Moving over to the death benefit comparison, showing the top 4 carriers, Symetra, Nationwide, Lincoln National, and Mass Mutual, you can see the end of year 1 death benefit. The index UL products all have about the same death benefit, right around $500,000. This is the lowest death benefit we could achieve and maintain the policy to not become a modified endowment contract, as we discussed earlier. You will also see here the death benefit for the whole life from Mass Mutual is $1.25 million. Whole life does not have as many movable levers, so we had to use a higher death benefit with that product to avoid the MEC status. Curious to note, you see the death benefits reach or exceed $1 million in the IUL products nearer the end of the 20-year funding time. This is because on the index UL products, we're using an increasing death benefit so that we can start with the lowest amount of insurance in the earlier years to keep the cost down. Whether using index UL or whole life, this is still a self-completing plan. If death occurs early, this is a very self-completing plan for their heirs. Okay, looking at the cumulative premium report, you can see all 4 plans have been funded at the same intervals, at the same amounts with $2,000 monthly premiums each year for the first 20 years, resulting in a cumulative premium from age 45 to 65 of $480,000. So what will the potential distributions be at her age 65? Take a look. What we did through our software is stress test each product to maximize the allowable distribution amounts to result in not lapsing the policy at current cost of insurance and estimated crediting rates. While most of you know each carrier has their own index options, caps, and participation rates, we tried to make this as even of a playing field as possible with the index UL products by placing all of the index allocations in the 1-year annual point-to-point with a cap on the regular old S&P 500 index. We then lowered the illustrated index crediting rate to 6% for all of them. And this helps us differentiate each more so by the internal costs rather than the varying crediting rates. Now, for the Mass Mutual Whole Life, we left them at their current dividend rate of 6.6%. For Mass Mutual, their average dividend rate over the past 20 years has been 6.79%, and the median has been 6.92%. So we're pretty comfortable with their 6.6% illustrated dividend rate. So what is the result? Well, in this comparison, we tested to determine the maximum distributions from age 65 to 85. As you can already see, Symetra's product produces a non-guaranteed projected $83,000 of annual distribution from ages 65 to 85. Lincoln National and Nationwide's product both generated around $66,000, while Mass Mutual's Whole Life generated around $52,000. So how does that translate over the duration of the distributions? As you can see, the cumulative non-guaranteed projected distributions over the 20 years, ages 65 to 85, resulted in anywhere from 1 million to 1.6 million in potential income in retirement, all for 480,000 in total premiums over the initial 20 years. And to add icing on the cake, these distributions are income tax free. She gets to enjoy the full piece of the pie without a debt partner in retirement. Now, following this call, you will receive an email with this webinar replay, but we will also include a link to the presentation you're seeing on your screen now. However, the presentation you'll have is interactive. It will allow you to move the slider bar to look at each year, and it'll also allow you to toggle all 8 carriers' products to compare them side by side. Also, in the interactive presentation, it will allow you to download the carrier-produced illustration to review. One thing to mention, Index Universal Life has more moving parts than Whole Life. Basically, Whole Life has one variable, and that is the dividend rate. With Index UL, the variables include cost of insurance and expense charges, along with the index crediting rate. So if you have a client that would prefer a more conservative and predictable outcome, the Whole Life may be something to consider. While the Index UL should outperform the Whole Life, it may not in the long run, only time will tell. But in the chart on the screen, we lowered the crediting rate in the center column on the Index UL from 6% to 5%. We made no other changes. This resulted in about a 20,000 projected annual income reduction. However, it still outperforms the Whole Life by around 20%, even with that lower crediting rate. So what this really shows is the projected internal costs on the Index UL are much lower than Whole Life. However, the costs in the Whole Life are set at issue and guaranteed for the life of the contract, while the internal cost in the Index UL are subject to change if the carrier decides to or needs to make those changes. I believe an argument can be made in favor of both Whole Life and Index UL in this design. It is our job to show you the options so you can make an informed recommendation to your important clients. In summary, this client paid $480,000 in premium over 20 years. From age 45 to 65, she had a growing death benefit should she die premature. Then she began distributions from age 65 for about $83,000 annually. She took her last distribution at age 84, realizing total projected cumulative distributions of over 1.6 million income tax free. And in this hypothetical example, if she passes away after those distributions and dies at age 90, a $444,000 death benefit is paid to her heirs. So she put in $480,000 and the policy paid out more than 1.6 million during her lifetime and $444,000 upon death, which adds up to over 2.1 million, all paid out income tax free. Folks, most of your clients do not even know this exists. When you take time to show them the power of life insurance in a retirement plan, it blows them away. Take a minute, write down 3 clients or prospects that you know that may benefit from seeing this design. Give them a call. Tell them about this Roth-like complement to their overall planning. There's a good chance your next sale could be a LIRP, a life insurance and retirement planning. And as you know, Financial Markets has one of the most diverse portfolio offerings, allowing you to know that you're offering the best to your clients each and every time. Now, good luck to all of you on the call with tickets in the drawing. Merry Christmas to all of you. And I will turn this back over to Tara Sewell to continue with the drawing.
Thank you, Neil. Another great use for life insurance. So did you all write down 3 client or prospect names? Did you include yourself on that list? Maybe it's something you want to see for yourself. Reach out to your internal wholesaler today to discuss your next case. We are excited for you to see our newest FMI Pathfinder magazine. These were mailed a couple of weeks ago, so if you haven't received it yet, you should receive your copies soon. Now let's move on to our drawing and draw our first 2 finalists. Pull up our hat here and give it one last shuffle and drop those tickets in the hat. Remember, your name can only be drawn once. Carol Heller with 16 tickets in the hat. Is Carol on the call?
Taking a look here. Carol is not on the call.
All right, we will draw again. We're looking for our first finalist. Mario Corpolongo. Is Mario on the call?
Mario is not on the call.
Okay, again, you do have to be present to win, so we are going to continue to draw, looking for our first finalist, Faith Christoph with 25 tickets in the hat. Is Faith on the call?
Faith is not on the call.
Okay, we'll be drawing until we find someone on the call. Jeff Partridge, 155 tickets. Jeff on the call?
Jeff is on the call.
Congratulations, Jeff. You are our first finalist for our Amazon gift card. And we're looking for our second finalist now, Raul Hernandez with 80 tickets in the hat. Is Raul on today's call?
That he is.
Congratulations, Raul. You are our second finalist. We know that policy reviews, let me go back, are a proven method for uncovering new business. Your business opportunity report is sent out the first week of the month, and it highlights important details such as upcoming client birthdays, policy anniversaries, expiring conversions, and premiums due soon. We encourage you to review this report and leverage this report to proactively engage with your clients and to drive meaningful conversations. If you have questions on your report, please reach out to your internal wholesaler. We'd love to show you conversion options, or maybe there's a potential life settlement opportunity. Let's draw our next two finalists. Heather Adajar with 80 tickets in the hat. Is Heather on the call?
Heather is on the call.
Congratulations, Heather. You are our third finalist. Rita was Sarah with 70 tickets in a hat. Is Rita on the call today?
And Rita is on the call.
Congratulations, Rita. There are many great resources available to you on our website, fmiAgent.com. One of my favorite resources, e-apps. We've had great success this year with producers using e-apps to submit their business, and life insurance is available through iPipeline. Very simple platform to use, and your internal wholesaler can help you if you get stuck. Our annuity e-apps are now available through Firelight. We would love to help you streamline your life and annuity sales. Reach out to us today. And now let's move on to our fifth finalist. So far, we have 4 finalists: Jeff Partridge, Raul Hernandez, Heather Adajar, Rita Musera, and now for our 5th finalist, Ely Nicolay with 179 tickets. Is Ely on the call?
Ely is not on the call.
Okay, let's draw again, looking for our 5th finalist. Larry Alderson with 169 tickets. Is Larry on the call?
Larry is on the call.
Congratulations, Larry. So our finalists today include Jeff Partridge, Raul Hernandez, Heather Adajar, Rita Musera, and Larry Alderson. I'm going to turn it over to Neil to give you some information about our upcoming cruise.
All right. Thank you, Tara. Well, time is ticking. Time is running down to the qualification for the FMI Agent Point Awards trip. With as little as $1 million of annuity premium or $30,000 of life insurance premium or any combination, you and a guest could be on your way to the next amazing FMI Agent Point Awards trip. Hopefully you'll join us for an unforgettable cruise up the Pacific coast aboard the magnificent Royal Caribbean Serenade of the Seas. The sailing date is Tuesday, May 5, 2026 through Sunday, May 10th. Immerse yourself in the natural beauty of the Pacific coast while enjoying gourmet cuisine or relaxing by the pool. Set sail from vibrant Los Angeles. Visit Seattle's Space Needle for a 360 view of the city. Explore historic landmarks in Victoria, British Columbia, and enjoy the picturesque Bouchard Gardens in Vancouver. Qualification ends January 15th, 2026.
Thank you, Neil. Let's pull our hat back into view. We have our finalists, Heather Adajar, Larry Alderson, Rita Mussera, Jeff Partridge, and Raul Hernandez. Give it a shake. All right, here we go. Congratulations, Jeff Partridge, on winning our $500 Amazon gift card. And congratulations to our runners-up. You will each receive a $50 Amazon gift card. Thank you for spending time with us today. We appreciate your trust and your business, and we are honored to share this journey with you, helping families and creating lasting legacies. From the team at Financial Markets, have a beautiful day and Merry Christmas.